Good morning. It's Thursday, May 9th, about 6 a.m. Central Time. Overnight, the precious metals are mixed after yesterday's consolidating action. Chinese trade balance data showed an increase of $513 billion in May versus April's slumping data. Chinese import growth is critical in supporting our commodity supercycle theme. So if you look at the overnight session, you got gold off just a few dollars right now, but starting to recover. And then also the silver market up 30 cents, butting up against our resistance points. The dollar index getting a small boost up 18 ticks as the Bank of England just held interest rates steady and unchanged right now. So gold's doing a great job in correlation to some of these other rising factors. Now the S&P 500 overnight had shifted negative after a 3-day tight range where the Dow Jones could snap its best consecutive winning streak in 2024. The Nasdaq remains within 1% of its all-time highs, and I outline resistance. If you are working with me closely on the desk, trading some of these different things I'm outlining on the S&P 500, the resistance point still remains about 52.20 to 52.35 on the S&P, where our first level support is going to be 51.90 down to 51.86. That's the 50-day moving average. A break below this level could indicate a more significant washout down to 51.50 to 51.30 pocket support. Traders that I'm working with that are short are looking to cover their first position near the 50-day moving average and leaving those additional positions to run. If you'd like more information on that, give me a call, 312-858-7303. Now, crude oil futures continue to have seen a possible bottoming action yesterday after briefly dipping below the 200-day moving average at 77.90. That gave traders an opportunity to cover their shorts and reposition possibly on the long side. A sharp decline in EIA inventories helped support the recovery, while a break above $80 could lead to a larger move of 80.80 and then also 81.70. The traders that I've been working with closely have been positioning mostly in December, March, and June contracts into next year. The reason why we're doing that is because of the less volatility that we're seeing due to the direct influences that the United States might have on this Iran conflict, Israel-Hamas conflict, where yesterday we saw the U.S. pause some bond shipments to Israel and the front month futures was massively impacted, where the back month tended to remain calm and stay within a consolidating range. So that's one of the reasons why we're positioning in these farther out contracts. We don't want that volatility, but I firmly believe if we continue to see a series of subsequent drawdowns on EIA and a broadening conflict in the Middle East, that all contracts will start to rise evenly. You'll see the front month go up, and then the back months will start to follow suit. Now, getting into the gold and silver market, gold futures continue to kind of coil sideways right now, looking for a catalyst, which we won't see until next week when we see the CPI report and the PPI report. Futures will need to punch through resistance at 23.51 in order to spark new ETF inflows and make a run back up to the 2400 level. Surprisingly, gold has done an excellent job shrugging off the Fed speakers, which have been mildly hawkish, and then also the rising dollar index. The dollar chart has been coiling and moving higher as well. Now looking at silver, silver futures are continuing to outperform gold after punching up against that resistance point, about 27.93, where a break above could create another this is it moment, and traders will start to flock into that market. The gold-silver ratio has dropped back to 83:1, giving silver the edge over gold. Today we're going to see initial claims, which are expected to see a modest uptick of 212,000 versus last week's 208,000. If you got any questions, you want to work with us over here, and you also want to see the report that I send out with the Metals Minute. If you're just checking this out on YouTube, I do an entire write-up with some of these critical levels here and give you more actionable trade ideas. My number again, 312-858-7303. Remember, futures and option trading does involve risk loss, may not be suitable to all investors. Good luck and good trading.